All right. Welcome everyone to another Rocket Dollar webinar. This is just part of our educational series where we go over many different educational topics with different investment providers and issuers. And we have Nick King of Vint here today. This is traditionally a tough alcohol in an IRA, kind of a tough place to navigate for IRA investors. We've been talking with Vint a lot over the last 6 months, about their IRA funds and some of their investment opportunities that they put out to IRA investors. So we're excited to have this conversation today, talk about a really unique investment asset class in the wine and spirits. And this is something that's going to be pretty different from anything we've ever talked about before. So as far as real estate or crypto or stock market stuff, totally different topics and business dynamics. Nick, really excited to have you as a guest today. Why don't you introduce yourself and some of your background? Right. I got you. I hear you now.
Yep. I'm Nick King, co-founder and CEO at Vint, and my background is in the investment industry. I was at a value investment fund that managed about 20 billion and applied that lens as a value investor to this asset class to create Vint. So looking forward to sharing more about it. You can hop through the slides.
And how old is Vint, Nick? How long have you been around for?
Yeah, so Vint conceptually was launched 2019. That's when really I dove into this asset class and started to see what is really, really interesting. These strong returns, low correlation to traditional financial assets, and just an overall inefficient market. And giving you some background on, how did people used to invest in wine, which was really, really challenging and core to the creation of Vint. Basically, the only way to get exposure to the asset class was you had to own a cellar or cut a check to someone specifically in the UK who would buy you wine and send you a list 3 weeks later. And there are a number of problems with that, but to break it down, it's not a financial product. And that was the biggest issue, the lack of transparency, the inefficiency, and low accessibility. We thought there was a better way to open this asset class up. And despite the fact that there is this long track record and long history of people investing in it, I think there's a big educational component, which is why we love this partnership, getting content out and continue to educate people that, collectibles like wine, like spirits are, a material part of people's portfolio, specifically these ultra high net worth investors. And the problem was the restrictions that were needed to access the asset class, which is why we spent all this time with the SEC to create Vint.
Yeah, and one comment I think that's been working with the Vint team is, Rocket Dollar gets approached by these collectible investment platforms all the time, and there are really strong restrictions against collectibles and IRAs. So, part of Nick's team, and that was really helpful to Rocket Dollar, is getting those securities and dealing with those SEC regulated stuff because when you're a retirement investor, you can't really be holding these bottles like in a private cellar. You need to be as far and as distant from these assets as possible. Basically just owning a security, not owning individual bottles. And that was something Vint was really helpful with, respectful of our compliance process, and also education for us as well on their approval process and getting all those assets started.
Yes. It took about 9 months with the SEC, Brendan, to set up the structure in which we curate these thematic collections. Each one is its own LLC, and securitize it with the SEC. And we really view this to be the most efficient way to get access to this high performing and stable asset class. So Cambridge University ran a study dating back to 1900 comparing wine against art, against equities, stamps, bills, bonds. And it showed that fine wine actually had the second highest return behind equities, only a little bit behind at about 8.5% annually. And they tracked auction market data, merchant data, a lot of what we do when it comes to sourcing these assets. Although whiskey has a bit of a shorter track record, i.e. there's not as much data, going back to 1900, we've seen really, really strong returns across the rare whiskey market, driven in particular by globalization. More people across the world are interested in Scotch, Japanese whiskey, and also bourbon is really growing in popularity now. Thinking about what are the underlying factors that drive returns in this asset class, and why is it one that provides stability in years like 2022, where broader traditional financial markets really struggled? Why has this asset class performed so well? One, it's not correlated, and it's not correlated because things like interest rates that are driving traditional financial assets are not material factors such as scoring, weather, production data that we're looking at when sourcing the assets. And then the fundamental supply and demand dynamics of the industry are really what underpin the stability and strong performance in volatile times. No matter what, there's no more right bank Bordeaux wine being produced because there's no more land. It's fixed production. And then once it's released, the supply is only going in one direction, it's going down. So you have ever decreasing supply with an asset that has this really unique characteristic that over time, as it ages, its quality is improving, thereby driving demand up. So you have decreasing supply with increasing demand. You're going to see price appreciation over time if the laws of economics hold. And you've seen this in 2001 during the dot-com crash. Fine wine was up while obviously the NASDAQ had a huge collapse. You saw it in 2008 where wine was basically flat and the S&P was down 37%. And then most recently in this volatile time, which is when we've been participating in the market, the broader wine market has been up, and then Vint has continued to exit assets. We've had 11 partial or total exits across 65 collections, resulting in net IRRs of about 31.5%. So looking at this asset class in comparison to others and different types of environments, one that is really top of mind for people right now is inflation. Sentiment around the US dollar is very low. With that, people tend to look for tangible assets, these assets that have been a proven store of value. And the number one thing that people think of when they think about hedging against inflation is typically gold, as that is probably the most accessible in terms of you can buy gold ETFs and other financial products to get exposure to gold through your traditional brokerage systems. However, we've seen it with our platform in terms of the growth, in terms of the end channel demand, where we've been able to exit these assets, that people are looking for these assets that have proven to be a store of value. And with wine, over that 120-year period that Cambridge studied, it 2x'd inflation. And it's largely correlated to general wealth. As general wealth increases, the top 1%, the end consumer of these assets, they continue to buy them in inflationary environments and in recessionary environments.
And just a question on that chart there, Nick, is who's running kind of like that Burgundy 150 and the Champagne 50? Like, where's that price data kind of coming from?
Yeah, that's a great question, Brendan. That's coming from LiveX. It's the London International Vintners Exchange. It
Mhm.
is the B2B stock market for wine, where people are trading wine, and they've been around since about 2000 and are really one of the best data providers out there. So when we're looking at Vint in terms of structuring portfolios, we look at their index. We're doing a lot of fundamental analysis on our side as well, and then also quantitative analysis. We're not only looking at LiveX, we're looking at US market data and auction market data to get a full picture of the market.
Yeah, and that price discovery seems like always like a huge determiner, and what makes an asset very professional versus one that, there might still be a couple legendary investors, but it's just people taking shots in the dark, as far as like a bigger, more efficient market.
Yes, that is a great point. And what's interesting about the wine and spirits market in comparison to, say, art, is that there are more market participants. You have merchants, you have investment funds, you have individual collectors, and you have these exchanges like LiveX or Bordeaux Index, where you're bringing these parties together, and you see these wines transact not once every 5 or 10 years, but 5 or 10 times in a quarter, such that price discovery should be better just from a market dynamics perspective. So over this 10-year time horizon, you can see the returns that these asset classes have generated. And one thing that has been interesting is that the shorter that you make the time horizon, the more you pull it forward to current time, you've seen stronger average returns across these asset classes. And to me, I think that's from more education and more accessibility of people investing in this asset class. You could walk down the street and ask 100 people if they've ever heard about wine and spirits investing, and you'll have a handful, but a lot of people, know people who collect these assets, or they know art collectors. But we've started to financialize and bridge that gap. I think large part by working with partners like Rocket Dollar and continuing to put out content that is financially driven, as opposed to focusing just on the wine, but the underlying metrics of the asset class.
And we had a good question. I think you made one comment on this earlier, but someone asked, anonymous attendee asked, are there estimates to how many new growers are entering the market? And is the supply of grapes growing over time? And I think that's like a general wine question. And then one thing I would add on to that is just do growers adding onto this market, do all of them really apply to your market, or is there kind of like an upper echelon of growers that are in a different class?
Sure. That's a really good question. I'll touch on the general wine question, which is you do actually have more growers entering. We have a podcast. We had a Vermont grape grower on, and that region was unable to produce wine. As temperatures have increased, they're now able to make better wine, grow grapes up there. However, Vermont does not meet our criteria. We are looking at not just the top decile, but really the top 1 or 0.1% of wine and spirits. And why we do that is we've studied price to score data, similar to the price to earnings ratio for public equities. And what we've found is that the higher the price to score ratio, the stronger the returns. That's one of the benefits of fractionalization and securitization, is that recently we did a collection of Domaine della Romanée-Conti. It is the most expensive wine in the world, one of them. And we had a single case of 3 bottles, and it was $105,000 offering. So by focusing on this top 1%, we're not only exposing investors to assets that have the track record of generating the strongest returns, but layering in the fractionalization, it makes it really efficient to diversify into that top tier of asset where there is no more supply coming online. There's no more land in Bordeaux, in Burgundy, in Tuscany, in Napa that could be used to produce these top 1% wines. So from a portfolio construction perspective, you know, a lot of people throw out this word diversification. They're like, oh, well, you know, I'm diversified across tech stocks, or I have this 60-40 portfolio. I feel really well diversified. And there's an academic named Harry Markowitz who coined this term, the modern portfolio theory, which talks about building a diversified portfolio will not only increase returns, but decrease risk associated with that. The key point of building that diversified portfolio is a low correlation across the assets. So despite the fact that you may be diversified across, you know, 100 tech stocks, when that market compresses and valuations compress, typically your positions move in a very similar manner, representing a high correlation. So because wine and spirits, it's correlated to things like the general wealth of the world increasing, so people continue to buy these goods, the weather that year, the production quantity, the scoring data, because those are some of the factors that underpin the returns, you don't see a strong correlation to traditional financial assets, thereby, and you know, through the lens of modern portfolio theory, offers efficient diversification.
And we got a question. Brian asked a question about where the real estate returns are coming from. It seems like you got sources at the bottom of all the slides, so we can send that out. That was the slide before, I believe, the one.
Yes.
So
we'll pass on those returns.
that's a Dow Jones Real Estate Index there that I see at the bottom there. So, all right, thank you. We can keep moving.
Great. We'll walk through a bit about how our process and our platform works. So we have one of the best managers in the world who's in charge of sourcing these assets. His name is Adam LaPierre. He is one of 50 or so masters of wine here in the US. He's also a very data-driven individual and was previously at a big wine merchant, Vinfolio. So when he's going out and we're looking to curate these collections, we take a two-pronged approach. We are looking fundamentally and then also quantitatively to identify assets that are attractive. On the quantitative side, I've touched on some of the data sources, but we're taking in UK market data, US market data, and auction market data to identify assets that may be mispriced or trading below their estimated fair market value. Combine that with his decades of experience and truly one-of-a-kind knowledge of the wine and spirits market. This two-pronged approach is one that we feel really, really good about in terms of identifying assets. From there, we'll file all the paperwork with the SEC. There's about 200 pages on sec.gov where you can review how we do what we do, what assets are we sourcing, and each individual offering that we do is qualified by the SEC. From there, we have weekly collections, and we actually have a broader fund for accredited investors. That is a new product that we've rolled out that has seen really strong uptake recently. But there are these two ways to invest in the assets. And then over time, we're managing the storage, the underlying insurance. We have a blanket policy with Chubb across our entire portfolio, and we store with companies like Octavian, Vine, GSN, all of which are wine storage facilities. And then we're basically running portfolio management over time, where we have all this data that we're taking in and say, this Pomerol rarities collection, some of the underlying wines have appreciated in value. We may go to market and see if there's an attractive offer, for an attractive bid on those wines. And one thing that's been really interesting is that not only are we able to source these assets below fair market value, we do that through relationships, scale. We're sourcing about $1 million worth of wine at a time. And also data in terms of creating the sourcing edge. We've also found ways to exit these assets at a premium to what we perceive the fair market value to be through merchant partners, exchanges, and then actually our own platform. We have the Vint marketplace, which we spent months getting licenses with the federal government and then also the states so that Vint can own these exit channels, thereby eliminating transaction fees that would be associated with other channels.
Right, and we had a question. You talked a little bit about storage, but we have investors that, they'll invest in precious metals and other assets. So oftentimes, like, they'll really laser in on the storage type questions. So you mentioned that there's like a wine storage vendor. Can you just describe a little bit of what more that looks like and what their experience is? And then we can get into the insurance later. They had a follow-up on that.
Definitely. So these storage facilities, they don't store anything other than fine wine and rare spirits. They're big warehouses, specifically in the UK. The UK is the home of fine wine trade, and you can typically find better pricing over in the UK. Gives you a lot of flexibility in terms of where you're going to exit the assets as well. So these are all climate controlled, very secure, like armed guard wall, like big fences kind of secure. And they also run authentication processes, multi-step checklists on all of the assets that come into the warehouse. So these are an example is Octavian, the facility where we store quite a bit of wine. They have about $1 billion worth of wine across their 2 warehouses out in outside of London.
Great. Yeah, and I assume it's the proximity to France and just a long time financial hub in the UK that they've really become such a home for that. So high security facilities, climate controlled and specialist in these types of assets. And then the person's question was asking, is the insurance really covering the whole value of the bottle, or is that really for your whole portfolio? How does the insurance kind of interact with Vint's collection?
Yeah, so the insurance is covering the fair market value of the assets. So each individual collection or each individual bottle layers into that, and we report all of that information to Chubb.
And then is the whiskey secured somewhere else, or it seems like a lot of these fine spirits are in the same location that's the same wine facilities are qualified to hold?
Yep, same location. We've done some spirit sourcing here in the US, and we work with GSN, which is out in Napa. We store there as well. We've done a few casks, and those are actually stored in specific cask storage facilities in Scotland. So we did a Bowmore cask about 1.5 years ago, and that is actually one of our more recent exits. About 6 months ago, it was about a 365-day hold period, exited this Bowmore cash that was stored in Scotland through a partner at about a 30% net return.
Mhm. Great, thanks for answering that. All right, let me read the, okay, that's the last question we have right now. We can keep going.
Great. Thinking about diversification and portfolio construction, we're of the view that diversification is not just an important holistic portfolio concept, but also within individual asset classes. So we had discussed the LiveX data, the Burgundy 150, that chart. The global share of trade is LiveX's data across their marketplace and other data sources. And we do look at that as kind of a proxy as to how we may source, but we also feel that we can drive alpha and find an edge when it comes to sourcing these assets across, the data, the relationships, and just fundamental research. A great example of this is one of our early collections was the Saint Emilion upgrade collection. And what we did was we did research on a number of producers in the region of Saint Emilion. And every 10 years, there's a conference where producers are upgraded. And one of these had been what we felt like was snubbed in 2012, and they had continued to improve quality. And we basically were attempting to drive alpha by taking a bet on these wines that they would be upgraded in 2022, a year after they were upgraded. And we saw subsequent price appreciation of that. So we do have this index, but also look to our own research and analysis to find opportunities.
And a question I had, I think we talked with Elle about this the past couple months. It was a really surprising answer. Is what's the average age of some of these assets that are in the portfolio? A lot of people, if they don't know the space, they think like, oh, you'll just keep it there forever. So with these top 1% assets, how many years or decades are of age?
Yeah. So we source everything from futures, which is wine that's still in barrel and is about to be bottled, to a 78-year-old Macallan is our oldest. A lot of the wines are around that 3 to 20 year mark, with kind of exposure across the entire range. A lot of these assets, whiskey has an infinite drinking window. On the wine side, a lot of what we're purchasing is about a 50-year drinking window. So the, risk of it going bad, and these wines have been known to hold even beyond that. It is this long horizon of letting it age and subsequently demand increasing. And for us, we look at it as a medium term investment in the 3 to 7 year horizon. The average time for our exits thus far has been about a year, but expect more of that 3 to 7 year horizon.
Okay. Yeah, so these can be long-term assets, but Vint is not necessarily aiming to hold them throughout their entire drinking window for the investors.
Yep. And these are some of the things that we look at when it comes to, as I had talked about, finding an edge when we're sourcing these assets. Valuation and pricing. The wine market is very, very outdated. I'd say we're one of a few people who are really digging into data and valuation when it comes to sourcing these assets. My co-founder was a data engineer at Capital One, and we have a team of engineers who are pulling hundreds of thousands of data points for these wines and using it to source production quantity, critic scores, drinking window, which we had just talked about, provenance. We like to source either from the source or as close to the source as possible. So we typically have direct line of sight to the original producer, and these goods are stored in bond across Europe. We've discussed insurance as well. On the qualitative side, that's something that Adam really brings an edge to. These brands, relationships really with brands and the negociants who we're sourcing from, understanding of vintage quality. So the 2022 on Premier season kicked off, and we have direct lines where we can get data and analysis around that to understand the vintage quality, and then a really diverse and trusted supplier network such that we can find the best pricing on these assets.
Yeah, and we had a question about foreign currency, and best price. So someone asked, with all this trade kind of going through the center of the UK, now back on their own. They've always been on their London pound. Is there any currency risk compared to USD, as the USD versus English currency might fluctuate?
Yeah, that's a great question. As soon as we file with the SEC, the price is locked in at which the assets are acquired. So that's how it works. Sure, there's currency risk on the margin, but a lot of what we're sourcing is in USD. So LiveX, that exchange, we transact in USD. Some of these negociants, we are transacting in euros, but the investor does not bear interest rate risk because the time at which we file with the SEC, the price is locked in US dollars.
Yeah, so you'll have an initial offering price, and then the exit liquidity could be dependent on where this group is buying it from, but they will be subject. They're going to have to probably go to the UK too to acquire some of these fine spirits, just as everyone else has. So, sorry, go ahead.
Yeah, we look to exit across the world. We have the relationships and licenses where we can exit in whatever market we view to be most favorable.
Mm-hmm. And what are some of the groups, really? Could you just describe a few of the groups that are like great exit liquidity for Vint and these investors? What type of people, restaurants or groups, parties are buying, the next step of the process?
Definitely. Exchanges. So LiveX, who we've talked about, Bordeaux Index, and Wine Owners are three exchanges in the UK where you can transact with other investment companies, other merchants. The largest segment there are merchants. Secondly is individual collectors. So we have these licenses here in the US, and we're on Wine Searcher, which is basically a wine search engine that's driving leads to the Vint marketplace where we can exit the assets. Mm-hmm. So those are really the two biggest. Restaurants are, another possibility. Distributors are a possibility, but we view the exchanges and then our own D2C channel to be where we can find the best pricing.
Okay. And when you say merchant, is that meaning like just a wine merchant or a fine spirits store? I'm just a better understanding of who that is.
Yes. That's exactly what it is. Sometimes it's, a physical shop. A lot of times it's a physical shop with also a pretty large online presence.
Yeah, they might be both like one location plus online that they'll ship to other collectors or kind of end of the market.
Exactly.
Great. Thank you for your question. All right, we can keep going.
Well, seems like you knew what was coming up next, Brendan. Exit strategy. We're tracking a lot of data and looking at the fair market value of these assets, and we are very fast to move if we find an opportunity where someone wants these assets above the perceived fair market value that we're calculating. So we take inbound offers, we'll list these assets on exchanges with target prices that we hold pretty firm on, so that we can exit through any of these channels that we just discussed. And some of the things that we're considering is that premium to FMV that we're able to achieve. I want to say the average premium to FMV is somewhere in the low double-digit range, but we've seen everything from low single digits to north of 20% premiums to FMV that we've been able to achieve on exit. We're not bound to exit an entire collection or an entire fund. We look to be opportunistic where, some of these assets may be exit worthy right now, but we may want to hold on to others and manage that over the life of a fund or a collection. Efficient diversification is, in my opinion, something that you can really only achieve with this fractional model that Vint offers. I use that $105,000 3-bottle case of DRC as an example. Back at my old investment job, we were rarely taking positions in the portfolio above 3.5%, maybe 5%. So if you think about building a portfolio and you want 5% to be your target exposure for any single asset in wine and spirits, and you want to include the top tier like DRC, you would need a $2 million portfolio of just wine or spirits. So that fractional nature allows you really, really efficient diversification and exposure to the top end of the market without having to have a $5 million portfolio.
And we had a question come in about the asking price that Vince is sending that out. From my understanding, it seems like you have a kind of secret internal value that you believe that the collection is worth. And the person was asking, how do you determine that? Do you have a specific ROI target, or is it more just this is what we think the collection is worth?
Yeah. So we're using that data to estimate a fair market value. I'll say we talked about kind of the positives in that there are many buyers and sellers. The price discovery is not the same as the US equities market in terms of people transacting every single minute to really determine the price. So we estimate this fair market value, and one of our goals and actual KPIs is to bring these collections to investors at a price that we believe to be below the estimated fair market value. So because we're using this data, because we're sourcing such large quantities, we can get better pricing, and we cut out, typical transaction fees like through auction houses that may hurt your entry price. So that's how we look at offering the collections. Is the goal is to do so at a discount to the estimated fair market value.
Yeah. So you found a way for the margins to be much, much better. So it's a slightly less, but you've already beat so many other collectors in other ways that there can be a nice return there, even if it is maybe I don't know how many percent it might be below, but that's going to cause buyers to move fast and to purchase those collections rather than having to sit on them for an extra year or two.
Definitely. I look at it as acquiring these assets with a margin of safety. So, you can find it specifically in the whiskey market, which has seen strong demand, but it's even more inefficient than the wine market in terms of lack of transparency. But we have data sources that are pretty unique, where we're studying this and looking for the opportunities to acquire the assets at a margin of safety.
I'm excited for this part of the presentation as a brown liquor drinker, and going to Japan on my honeymoon here. So I'm going to look for some tips on where to be tasting this stuff.
Yes. Karizawa recently reopened. So one of the most sought after Japanese whiskey producers is Karizawa. Our first collection was the Karizawa collection was the Karizawa 36 Views of Mount Fuji. It's a 36 bottle set. We have every bottle in the set, and each label is a different view of Mount Fuji. And I think we're one of the only people with the entire set. So, we're, personally we're bullish on them as a producer. And what's really interesting is they actually just reopened, and we got access to 3 of the 25 casks that they were selling outside of Japan. So we have 3 of the the newly reopened Karizawa casks, and did that offering on the platform about a month ago. So yeah, it's really interesting. I think what's underpinning it is the globalization, really strong demand across the world for these assets. This illustrates what I was talking about in terms of our edge, generating alpha and exiting assets above the fair market value. You can look at 2022, you have these indices, and we have collections that include parts of the indices, like the California index. We had the California collection and the Napa collection. It's not an exact, it's not a mirror image of that index, because we're looking to find advantageous producers or pricing across the market, which I think shows itself in our ability to outperform these indices over time. And I think I'll wrap it with this, which is, what are the 2 ways that you can get exposure to this asset class? We have collections on the platform. Those are qualified under Regulation A+ of the Jobs Act, and we do those about twice a week. They range in size from $25,000 to over $300,000, and the entry price is typically $50 or $100. We will look to hold those from 3 to 5 years, and we take a sourcing fee with that ideal target of below FMV in mind when we are setting that. So great for non-accredited investors, because they're able to get exposure there. And then we have the diversified fund, which for investors who don't want to log in every week to purchase collections, which typically sell out pretty fast. We did a Yamazaki collection last week. It went in under a minute. So we definitely got some feedback that we need larger collections, specifically Japanese whiskey, so that more people can get access. But if you're somebody who just wants to cut a check and get broader exposure as opposed to diversifying across a number of collections, we have the fund, and that's only available to accredited investors. $10,000 minimum investment, different fee structure, and just a different investor. We apply a very similar methodology when we're sourcing assets for any of these, but we're proud of the ability to offer this asset class and really, really efficient diversification and exposure to it to everybody.
Great. Thanks for presenting all of this, Nick. A question, is the $50 to $100, is that hold for an IRA, or is there a higher IRA investment minimum?
That does hold for an IRA.
Okay. All right. Yeah, so we have, Vint as a discount code at Rocket Dollar. And then also, Nick's colleague, L, has a special VIP code as well. That if you have a conversation with Vint and you don't not have a Rocket Dollar IRA, if you're interested in starting one, then you can definitely go talk to Nick and L and get that code. Someone asked, does Vint produce K1 for the investment?
Yes, great question. The collections are not K1. You get 1099 divs. We treat each one as a corporation from a tax perspective because we have thousands of investors. K1s we found to be quite unsustainable. So 1099 div for the collections, and then for the diversified fund, that is treated as a partnership, and you would receive a K1.
Mhm. Great. Yeah. And just another PSA again, investing in an LLC or, a Reg D fund, that is fine. Do not go trying to buy collections yourself with your IRA. They're really strong, very well proven over many years. It's in the law, collectibles laws that will basically distribute your IRA if you go after an individual bottle or collection. So this is a way for investors to still get exposure to this asset class through the retirement account in a compliant way, without actually holding a collectible or being near it themselves.
Alrighty.
Nick, thanks so much for coming. Last call for questions, everyone. Feel free to throw those out now. Nick, if people want to get in touch with you and your team, what's the best way for them to do that?
Sure. Shoot me an email, nick@vint.co, or L, who does our partnership work. Her email is LELLE@vint.co. And it's great to present and get this content out there.
All right. Thanks so much for coming today. Appreciate it. If you want to check out this recording later, or maybe you missed some of it, please go to our YouTube channel. And we also have this featured on the Rocket Dollar website in our resources section.